We often hear that active fund managers perform best in volatile and declining markets, but the evidence shows us it isn't true. Take the first half of 2022, for example, a bad 6 months for stock markets everywhere. SPIVA, a twice-yearly scorecard produced by S&P Dow Jones Indices, revealed that across Europe, the chance of outperformance was similar to a coin flip.
For example, in Germany, German equity funds had an underperformance rate of 55%. UK small cap managers had an underperformance rate of 57%. And managers of Eurozone equity funds had an underperformance rate of 58%. But the single statistic or the single number that we found most stunning was the underperformance rate of UK large and mid-cap managers who had an underperformance rate of 96% in the first half of 2022.
What's really interesting about that dreadful performance is that it's sometimes suggested that UK large and mid-cap managers do have exceptional skill. In the years immediately prior to that, they had performed reasonably well. But what the SPIVA analysis shows is that relative success is likely explained not by skill, but by systematic exposure to small cap stocks, which fell out of favour in 2021.
What we observed is that UK large cap managers tend to outperform the benchmark when small cap companies in the UK have been doing better than large caps. And what happened over the 12-month period ending in June 2022 is that UK large cap companies, for a variety of reasons, performed much better, like over 20% better than UK small caps, and resultingly or concurrently, UK large cap managers had the worst underperformance rate since the start of the SPIVA reports in 2014.
What those UK managers were doing is referred to as style drift. In other words, investing in areas outside a fund's stated investment style. There's nothing wrong with large cap managers investing in small caps, but they need to rotate back to large caps before small caps underperformed, which those managers clearly didn't. In short, says Benedek Vörös, it's a myth that British fund managers are exceptionally talented.
Well, the hard data tell us that it is not true. It is the 10-year underperformance rate for active large cap UK managers was 72%, which is better than in many other regions over the same horizons, but still says that 3 out of 4 active managers do underperform their benchmark over 10 years.
The lesson is simple. Wherever you are in the world, picking an active fund in advance that will outperform the market in the long term is extremely difficult. Your chances of success are very slim.